If we can understand economics on a basic level, we can be great at being investors. The reason why is because here's the thing. If we understand that there's scarcity around a dollar, if there's scarcity around a dollar, that means that the markets don't like uncertainty. The stock market thrives based on confidence and based on money supply. That causes the market to run. Confidence and money supply. Why is the market going to do it? Because the Fed said we stopping the money supply. So when they stop the money supply, yep, 100%. When they stop the money supply, they go into what's called quantitative tightening. Trap. Why is that called quantitative tightening? Because they're not easy. So quantitative easing is when the Fed printing money, right? They not letting you feel the effects of what's going on. Ease the pain, right? I'm easing the pain, rubbing the back. Take these, look, take this. I don't want you to feel it. It's okay. They lubing the economy. When they say nope, when they take the money away and say nope, we not pushing them, we not flooding the market with money no more, that's called tightening. Why is it called tightening? It's called tightening because now the market has to do the work on its own. The market now has to recalibrate itself. Like if you're in the hood, how do you know you use the scale too much? The numbers start messing up. The 7 grams start being 7.2 or 6.8. 21 grams start to be 21.6. 20 point. They like, damn, bro. Like, damn, why am I? Damn, I know I'm supposed to get this many. Wait, let me take the scale. Let me hit the tear button. Once I hit the tear button, I put the nickel on it. Once I put the nickel on it, the nickel is now going to recalibrate the scale. The scale is off. I'm either giving away too much or the dude think I'm trying to get over on him. Either way, it ain't good for business. Because now the dude talking about, man, let me bring my own scale. This don't look right. They think you trying to give it to them wet. They think you trying to put extra knots in your bag. That ain't what's happening, bro. My scale off. So you got to recalibrate the scale. What do? You hit the tear button. Once you hit the tear button going to put the zeros on. It's going to blank. Then you put the nickel on there. It's going to come up 0.5. Cool. Why? That's what the nickel weigh. 0.5. Once you put that on the scale is not good. You can go back to now. Look, this 28 grams without the plastic. Once I put the plastic on, it's 28.2. It's all love, bro. Once I put the knot in it, it's 28.3. It's okay. Now you look like I'm showing love. It's cool. So what I want us to understand is the market now has to recalibrate itself. Right? The market has to recalibrate itself. And so that's what's happening right now. The market is recalibrating itself. Right? The market is recalibrating itself. The market is now putting itself in a situation where it doesn't need the Fed to help it. It is now saying, okay, the seller's going to sell, the buyer's going to buy, whatever happens is going to happen. Right? The seller's going to sell, the buyer's going to buy, it is what it is. Right? Without the help of the Fed printing money for them. And so what happens now is, now stocks get to come to their true value. I always say you can make more money during a drought. Here's why. Because stock prices has been inflated so much. Right? If you hear, I was telling my trap masters this the other day in class. If you hear that a company is trading 100 times earnings, that means the stock price is 100 times what it's earning. So a lot of times companies have been trading for way more than what they've been able to earn. That's what's been happening during the pandemic. Companies have been trading for way more than what they've been earning because, here's why. Because the Fed is pumping $120 billion a month inside of the market, people were bullish. So because the Fed was pumping so much money in the market, everybody just kept saying up, 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 up. The Fed keep printing money. Everything going to the moon. Everything going to the moon. Everything going to the moon. Why? Because the Fed keep printing money. The Fed keep printing money. The Fed keep printing money. Up, 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 up. The Fed keep printing money. The Fed keep printing money. The Fed keep printing money. Up, 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 up. As long as the Fed keep printing money, we're going to keep buying. The Fed keep printing money. Yup, buy. The Fed still printing money. Yup, buy. And so what they did was they bought a lot of value companies with great balance sheets, but also companies that shouldn't have been getting this type of energy at all was running up, right? And so now, again, the Fed now says, we're not spending no more money. What you mean you're not spending no more money? Maybe not spending no more money. You serious? We're not. Matter of fact, we going from 120 to 30. Wait, how you gonna do that? No, sell. Now what's happening? This is now saying the people who are at the top, cash out. The Fed not putting no more money in the thing. Cash out. They're not printing no more money, y'all. Cash out. So now everybody cashing out. And so because everybody cashing out, it's now causing the market to correct itself. Now, let's go a little further. What the market loves to do now is say, let's cash out. And because everybody cashing out, I want to do something. I don't want to take my money and just sit on the side and not do nothing because the money is worthless. So now let's take the money and put it into bonds so we can at least get some type of return on our money, right? Let's put the money into bonds so we can at least get some type of return on our money. Typically, long-term bonds have greater returns than short-term bonds, right? Typically, this is why I'm about to get gangster with y'all. Typically, long-term bonds have greater returns than short-term bonds. Why? Because you're going to get rewarded for holding the money over the long term. Check this out. If ever you see short-term bonds having greater returns than long-term bonds, that is called an inverted yield curve, and now it's letting you know we're headed for a recession. Because short-term bonds should never have a greater yield than long-term bonds. If any time that happens, you can say, okay, boom, we have an inverted yield curve. Let me put as much money as I can on the side because it's recession time. Anytime you see that the short-term bond yields are higher than the long-term bond yields, you can say, yo, we're headed for a recession. 100% of the time. 100% of the time, if you get an inverted yield curve, you are headed for a recession, and you should now put cash on the side. So right now, look, Zoom is down 63% over a year. Let me tell y'all how gangster this is. I said to y'all this. I said, yo, Zoom hasn't made the corrections that it was supposed to make. I sold it at 248. I said, yo, the story just changed. And it has been falling ever since. How can you indicate that? Go look at buying rates, family. Go look at buying yields. That's what I'm telling you. In order to be a great investor, you can't just look at stock prices, because stock prices are only an indicator of how people feel. You got to look at other things, other indicators. You got to look at, like, what are the yield curves looking at? What are the interest rates that's going on? These are the things that help us understand what's going on in the economy. How do you know when a story changed? Anytime the reason you bought the stock no longer exists. Anytime you see, if you bought a company because of this and that no longer exists, the story has now changed. It's up to you to now say, because the story changed, do I still want to be here or do I not want to be here? So for me, it's about educating y'all on how to play the game. It's not about me telling y'all what stocks to pick. If you ever ask me what stock to pick, I'm going to be like, I don't know. You feel what I'm saying? I'm going to never tell a person what stock to pick. One, because every investor has a reason why they love a particular stock. Why I love a stock and why you love a stock is probably not going to be the same reasons. So why would I tell you to buy a certain stock? Even when I told people to buy Chipotle, I was like, yo, Chipotle gonna kill it. But the reasons why is because I knew why. When I tell you, they got moat, they got pricing power, great management team. If you don't know that, you're not gonna buy that. You should never buy a business based on what somebody else said. So I always want us to understand that, yo. And I'm personally not gonna tell you, like, buy Apple, buy Microsoft, buy Amazon. I'm not gonna tell you that. You know why I'm not gonna tell you that? Because I truly know companies that can outperform those businesses. In order to build wealth, y'all, during this market, I'm gonna be real with you. I need you to start getting comfortable with just reading on businesses. I need you to start understanding the importance of reading and understanding the businesses that you want to buy. And here's why this is important. I'm going to be real with you. The reason why it is important for you to understand the businesses that you want to buy is so when those businesses start declining, you know whether to buy more or you know whether to sell it. Feel me? That's the reason why I personally tell people, I'm not telling you should you buy a stock or not. I'm going to tell you, go look up the information on the business. Why? Because you can understand, you need to understand what a business is worth. You need to understand what's the story. You need to be able to, one of the things I teach my trappers is this: whatever business you're about to buy, create a story around it. The reason why it's important that you create a story around a business that you want to buy is because if you create a story around the business, you know now if the story changes, I no longer want to buy this business or I want to hold on to this business. You can start to understand in the inside, the details. It's the intricate details within the business that teach you whether or not you want to buy the business. And that's what I teach people. That's what I teach people. That's what I teach people. I want you to be an investor. I want you to look at this market on days like this. And I want you to look at companies and have your watch list already out of companies that you want to buy, companies that you're interested in, companies that you know the story behind those businesses. I want you to understand what's going on. Give an example of a story, okay? Example, I like Chipotle. Trap, why you like Chipotle? Because, one, every time they set up a store, they build relationships with all the farmers around that area, in a certain radius of that area. And then they use fresh vegetables from the farmers in that area. I love that. Another part of the story is for Chipotle, what I love is they allow employees to become store owners. And as you increase in position, the person who you promote to another position, as they increase, so does your pay based on what they do. You can start off in Chipotle as somebody that make guacamole and eventually become a store owner. Chipotle loves to build restaurantpreneurs from within their brand so that people can already understand the business. Another thing about Chipotle, the management is great because they don't take on debt. So the company has expanded and grown the business without taking on debt. Because of that, I understand the story based around this business. So when the E. coli happened, I understood what happened. They told us what happened. It wasn't nothing bad. It was because one person didn't wash their hands and they got one person sick. Cool. That's what happened. Can they fix that? Of course they can. How? Well, they started putting signs up saying, do this, do this, do this, do this, do this. All right, cool. Did that change the story about the business? Because, no, it didn't. It didn't change the story at all. Nothing bad. They didn't say we're not dealing with farmers no more. They didn't say none of that. All right, cool. So when the pandemic happened and everything went down, I knew that the story behind Chipotle didn't change. I understood this was the market overreacting to what was going on. So what I did was I bought more. The story behind the business didn't change. The market did what it was doing. The market did what it was doing. the story behind the business didn't change. Feel me? The story didn't change. The reason why I love the business didn't change. The stock market just did its thing. And the stock market just got emotional. And this is what the stock market does. Anytime something happens that causes fear, anytime something happens that causes uncertainty in the market will fear and it will sell off. Anytime the market has fear and it sells off, if you look at your business and it's not an event that is truly sector specific or industry specific, or the story didn't change behind the business, then that's how you determine if you're in or out of business. Man, look, man, it's your boy Wallstreet Trappin. I got some stuff to go do. I got some business to take care of, man. I'm home, so I got some stuff to do. I hope I gave y'all some game. I hope y'all, got some game from me just now. I hope I helped a lot of people out. I will post a live in a few. Do me a favor, man. We got the Wallstreet Trappin bundle. The link is in my bio. We got the Wallstreet Trappin bundle, man. It's dope. You get the Wallstreet Trappin course and a 2-day workshop. You get the Wallstreet Trappin course and a 2-day workshop. Definitely come join Trappers Anonymous, man. It's $47 a month. You get 8 weeks free when you get it for the year. We didn't have a class last Sunday just yesterday, because I came home and wanted to spend some time with the family. We do everything Monday through Sunday, man. So definitely come join Trappers Anonymous. All my trap masters, I love y'all. Have a great day, man. One more thing. Click the link and go get your Trapper attire, man. Click the link and go get your Trapper attire, man. We got the hoodies. We got the jogging sets. We got the Wallstreet looks like us now jogging set. We got the t-shirts. It's not a merch line. It's an apparel line. It's a big difference. Go click the link in my bio and get your certified Wallstreet Trapper gift, man. I love y'all. I appreciate y'all. Thank y'all for the support. When you copping, man, we want the world to know that we trapping. Y'all see what I did? I took the hoodie. I said I'm not promoting y'all. Let me put mine on. You feel me? So do me a favor, man. I will appreciate that, man. I want the world to know that we trapping. We the new face of Wallstreet. It's not your grandpa Wallstreet. It's not your great-great-grandpa Wallstreet. It's a new Wallstreet, and we a part of that, man. So definitely, man, go click the link in my bio. Support that. I appreciate that. We got some heat coming. We building that up. This is going to be the uniform. This going to be the uniform for the new Trappers, man. When I came up, the uniform of Trappers was Dickies and Timbs, you feel me? And Dickies and G-Nikes, or even New Orleans Dickies and Bally's. We new Trappers. We new Trappers. We got all sizes, man. Ladies, we got the extra smalls all the way up, man. Come rock with us. I appreciate that. Support that. It's your boy, the Wallstreet Trap, man. I love y'all. Go follow Trapper Apparel Inc. Trapper Apparel Inc. Go follow. That's the page. We'll be doing giveaways. We're going to be doing prizes. We got a lot of stuff coming up, man. I'm telling y'all, y'all going to love what we doing, man. It's your boy, the Wallstreet Trap, man. I'm out.